Hello everyone, welcome to the market opening bell for Wednesday, April 15, your 10-minute guide to the stock market. Rumors are circulating that the next round of US-Iran negotiations may be held this Thursday in Islamabad, the capital of Pakistan. Hong Kong stocks traded higher in a choppy manner. The Hang Seng Index opened 268 points higher, once rising as much as 334 points to a high of 25,995 points. It eventually closed up 211 points or 0.8% at 25,872 points. The A-share index rose 69 points or 0.8% to close at 8,671 points. The Hang Seng Tech Index gained 29 points or 0.6% to close at 4,851 points. Total market turnover for the day was 236.7 billion Hong Kong dollars. Southbound trading totaled 103.1 billion, while southbound funds recorded a net outflow of $2.017 billion. Among the southbound flows, net buying included Pop Mart 411 million and CNOOC 257 million. Net selling included Tracker Fund 3.161 billion, China Mobile 581 million, Alibaba 427 million, Tencent 371 million, and Geely Automobile 328 million. According to statistics, southbound funds have net bought SMIC for 6 consecutive days, totaling $667 million, and have net bought CNOOC for 3 consecutive days, totaling $838 million. The Hang Seng Index remained capped at the 26,000 point level yesterday. However, with the market hoping for the resumption of US-Iran negotiations, it's believed that the Hang Seng Index has the potential to challenge the 26,000 point level again, as well as the resistance from the 50-day and 100-day moving averages. Both moving averages are currently located near 26,090 points, while the next key resistance level will be the previous double head and shoulders neckline at 26,300 points. The 3 major A-share indexes opened higher and continued to rise. The Shanghai Composite Index climbed back about 4,000 points, closing at 4,026 points, up 38 points or 1%. The Shenzhen Component Index rose 232 points or 1.6% to close at 14,639 points. The Chinex Index gained 82 points or 2.4% to close at 3,558 points. Combined turnover in Shanghai and Shenzhen reached 2.3884 trillion yuan. The renminbi central parity rate against the US dollar was set at 6.8593, up 64 pips from the previous day. The offshore renminbi rose to 6.8157 against the US dollar, hitting a new high since March 23, 2023, and gaining about 40 pips during the session. According to the latest data released by China's General Administration of Customs, China's foreign trade in the first quarter of 2026 showed the characteristics of record total volume, with differentiated growth rates. Affected by geopolitical conflicts, export growth slowed noticeably in March. The total value of imports and exports in the first quarter reached 11.84 trillion, representing a year-on-year increase of 15% and marking the first time it exceeded 11 trillion yuan, the 11 trillion yuan mark in the first quarter. In March, exports in US dollar terms grew only 2.5% year-on-year, far below market expectations of 8.6% and significantly slower than the 21.8% growth recorded in January-February. Imports in March in US dollar terms surged 27.8% year-on-year, the largest increase since the end of 2021, mainly driven by soaring global energy and commodity prices. The trade surplus in March narrowed to 51.13 billion US dollars, half of the level from the same period last year, and well below market expectations of over $100 billion. The new tree exports remained strong in the first quarter. Exports of electric vehicles, EVs, lithium batteries, and wind power generators and components grew by 77.5%, 50.4%, and 45.2% respectively. Mechanical and electrical products accounted for 63.4% of total exports in the first quarter, up 18.3% year-on-year. Semiconductor exports performed impressively in the first quarter, growing 66.5% in January-February, driven by global AI demand and server upgrades. Hong Kong listed property stocks generally rose according to reports. An initial recovery in first-tier cities such as Shanghai and Beijing has clearly boosted home buying confidence in second-tier cities like Nanjing, leading to the concentrated release of pent-up demand. Following the full warming of the property market in first-tier cities, a mini spring rally in the Yangtze River Delta region's property market has also quickly begun. The China Index Academy stated that in March, increased supply of high-quality projects in core cities helped repair new home sales volume, narrowing the year-on-year decline. The performance of the second-hand housing market continued to outperform new homes, with a mini spring emerging in Beijing and Shanghai. Data from the China Index Academy showed that, supported by richer demand, second-hand home transaction volume in core cities achieved year-on-year growth in the first week of April. Beijing and Shanghai saw second-hand home transactions rise 32% and 36% year-on-year respectively, while Wuxi, Qingdao, and Wenzhou all recorded growth exceeding 30%. Ningbo and Xiamen saw second-hand home transaction volume surge more than 50% year-on-year. The continuity of market recovery in April will be crucial. If the heat in core cities such as can be sustained, it will help improve market expectations and lay a better foundation for stable operation of the property market throughout the year. Sources familiar with the matter indicated that contemporary Amperex Technology, CATL, is considering selling shares in Hong Kong to raise up to $5 billion. However, the relevant considerations are still underway, and no final decision has been made. The sources added that CATL is also considering issuing convertible bonds to meet part of its financing needs. If the fundraising reaches $5 billion, it would surpass Media's $4.6 billion listing size and become the largest Hong Kong stock issuance since Kuaishou raised $6.2 billion in early 2021. From a fundamental perspective, CATL had $49 billion in cash on hand as of the end of 2025, maintaining a net cash position on its balance sheet, so it's not urgently in need of funds in the short term. However, additional capital would provide greater flexibility for capital expenditures and R&D, especially in future battery technology such as solid-state batteries. At the same time, the potential $5 billion fundraising would only represent a dilution of approximately 1.2% of existing issue shares, which is limited in impact. However, it would significantly increase its share liquidity by about 33%, providing investors with an opportunity to increase their positions to capture the multi-year growth story and in energy storage systems. Meituan launched an AI product focused on family health management called Xiaotuan Health Steward and a paid membership service Health Card, intensifying competition in the internet healthcare sector. According to the company, Xiaotuan Health Steward provides basic medical inquiry and medical consultation, helps advise and supports family health record management, and intelligent interpretation of medical examination reports. Users can seamlessly switch during conversations to online medicine purchase, online consultation or offline appointment booking, forming a complete closed loop from the consultation to fulfillment. Meituan's share price fell 1.6% to close at $85.1. Market sentiment was buoyed by hopes that the US-Iran negotiations would reach an agreement, coupled with US inflation data coming in lower than expected, driving US stocks higher. The fear index VIX fell 0.8 points or 4% to 18.4. The S&P 500 rose 81 points or 1.2% to close at 6,967 points, less than 1% away from its 52-week high. The Nasdaq surged 455 points or 2% to 23,639 points, extending its winning streak to 10 consecutive days, the longest since 2001. The Dow Jones Industrial Average gained 317 points or 0.7% to close at 48,535 points. The Nasdaq Golden Dragon China Index, which tracks Chinese concept stocks, rose 160 points or 2.35% to close at 7,016 points. Software stocks continued their upward momentum, with Oracle rising 4.7%, while Nvidia and Palantir gained 3.8% and 2.5% respectively. In terms of earnings results, Citigroup delivered a strong performance, with its share price rising 2.6%. The bank's first quarter net profit rose 42% year-on-year to $5.79 billion, with earnings per share of $3.06, beating market expectations of $2.65. Revenue reached $24.63 billion, also exceeding the expected $23.55 billion. Fixed income revenue grew 13% to $5.2 billion, while equities revenue surged 39% to $2.1 billion, both beating market forecasts. The return on tangible common equity stood at 13.1%, the highest level since 2021 and above the company's target range of 10% to 11%. Group CEO Jane Fraser stated that the bank has entered the final stage of its asset disposal program, with 90% of its transformation plan now at or near target status. JP Morgan Chase reported earnings that beat expectations but lowered its net interest income guidance, causing its share price to fall 0.8%. Benefiting from strong revenue in fixed income and investment banking, the bank's first quarter net profit rose 13% year-on-year to $16.49 billion or $5.94 per share, surpassing market expectations of $5.45. The bank revised down its full-year net interest income forecast to reflect market uncertainty. Overall revenue for the quarter increased 10% to $50.54 billion, beating expectations of $49.17 billion. Fixed income trading revenue rose 21% to $7.08 billion, while investment banking fees increased 28% to $2.88 billion, both above expectations. CEO Jamie Dimon noted that market risks have become increasingly complex, including geopolitical and trade uncertainties, and therefore the bank lowered its full-year net interest income guidance from the previous $104.5 billion to approximately $103 billion. Wells Fargo reported results that missed expectations, sending its share price down more than 5%. The bank's first quarter net profit rose 7% year-on-year to $5.25 billion, with earnings per share of $1.6. Net interest income came in at $12.1 billion, below market expectations of $12.3 billion. The bank cut 7% of its workforce during the quarter. CEO Charles Schaff said focus is on streamlining the workforce, prioritizing efficiency and cost reduction to fund long-term growth initiatives. U.S. Producer Price Index (PPI) for March rose 0.5% month-on-month, the same pace as the previous month, but below market expectations of 1.1%. The increase was mainly driven by a 1.6% rise in commodity prices, the largest gain since August 2023, with energy costs surging 8.5% as the key factor. Meanwhile, final demand food prices fell 0.3%. Service prices remain unchanged. The final demand index excluding food, energy and trade services rose 0.2% in March, following increases of 0.5% in both February and January. On a year-on-year basis, producer prices rose 4%, the largest annual increase since February 2023. The final demand prices excluding food, energy and trade services rose 3.6%, the biggest gain since November 2025. According to ADP research, U.S. private employers added an average of 39,250 jobs per week in the 4 weeks ended March 28th. This marked the fourth consecutive week of improving hiring activity. The IMF, International Monetary Fund, lowered its global economic growth forecast for this year to 3.1%, citing the Iran war, and warned that if energy disruptions persist, growth could fall to 2%. The organization had previously forecast global growth of 3.3% this year and 3.2% in 2027 in its January update. Our stock pick today is EDDING GENOR 6998. EDDING GENOR is primarily engaged in biopharmaceutical business in China, focusing on the research and development (R&D) and commercialization of oncology and autoimmune drugs. The group is committed to building an integrated drug R&D system covering early-stage new drug discovery, preclinical research, clinical trials, and regulatory submissions for marketing approval. This enables full chain coverage from early discovery to commercialization. The group currently has 7 commercialized products comprising 3 originator-branded products, Vancomycin, Sackler, and FPN, and 4 innovative products, Vascepa, Molpata, Jingzhouda, and Rujianing. Among them, 6 products have been included in China's National Reimbursement Drug List (NRDL). The treatment areas cover anti-infectives, respiratory system, cardiovascular, hematology, and breast cancer. The group's new drug R&D pipeline includes 3 clinical stage products and multiple preclinical candidates spanning oncology, autoimmune diseases, chronic inflammation, cardiovascular and metabolic diseases, and respiratory disorders. For the year ended the 31st of December 2025, the group recorded revenue of RMB 2.487 billion, with net profit increasing to RMB 399 million. Adjusted net profit reached RMB 470 million, and adjusted EBITDA stood at RMB 950 million. The group's innovative product, Rujianing, received marketing approval from the National Medical Products Administration (NMPA) in May 2025. Rujianing is indicated for both first-line and second-line treatment of advanced breast cancer, offering broad market potential. On the 7th of December 2025, this product, together with the group's other HDAC inhibitor for breast cancer Jingzhouda, was successfully included in the National Reimbursement Drug List. The inclusion of these 2 products in the NRDL, alongside 4 other innovative products such as Vascepa and Molpata, is expected to become a new growth driver for the group's sales. The group's R&D engine continues to deliver innovative results. Its trispecific antibody GB268 obtained clinical trial approval from the NMPA in July 2025 and is currently in the phase 1 expansion stage. Preliminary clinical data show good safety and tolerability. In the small nucleic acid field, the siRNA drug EDP-167 targeting hepatic angiopoietin-like protein 3-ANGPTL3 entered phase 2 clinical trials in February 2026, demonstrating the group's ongoing exploration in cutting-edge areas such as tumor immunotherapy and small nucleic acid therapeutics. Additionally, through active external collaborations, the group's GB261 has entered into a strategic partnership with Candid Therapeutics Incorporated in overseas markets to jointly advance clinical research in autoimmune diseases, validating its international potential. The group's rich portfolio of commercialized products and robust pipeline is expected to provide new growth engines and cooperation opportunities for future development. Suggested buy-in price HK$ 3.05. First target price HK$ 3.25. Next target price HK$ 3.5. Stop loss price HK$ 2.9. I do not personally hold the above stock.